Okay, I think I've started recording. Good evening, everyone. I hope you guys really had a good weekend before we start with tomorrow's trading again. And I thought, I thought of making monthly one video consistently, and soon we will be live and learning a lot of things, and also may do live trading sessions going forward. But as of now, just to you know stick to things. Most of the voting was towards chart reading, technical analysis, and stuff. But ideally, many are really behind, or go with the technical analysis. Go that, yeah, it's charts, right? Analyzing charts is always interesting, and learning through that will definitely happen in a better way. But only and only you need to understand that only 8% or less are successful in trading with charts. It's not really easy, and it's not really tough until you arrive at a point where you can describe or understand what's happening with each candle, or you call it, or understanding the psychology of how it's happening and all. So without wasting much time, let's quickly begin. I'll try to make it a short crisp video, or I don't know how it will really go, but um, I thought of covering few concepts. Let's get started with that and see how it goes. So where should we start? Yeah, technical analysis. So to start with, these are the basic questions everyone will come to. What is technical analysis and why technical analysis? Maybe you can add third question as how should we use technical analysis, right? How? This will be the three questions that revolving in everyone's mind. But uh, when you try to understand, or when you start exploring, you will definitely understand technical analysis is a vast concept. It's not something that we can cover in one video, or 10 minutes, or 20 minutes, or in day. It also takes years if you dive deep into each concept. Each one will appear like a different world altogether, and each one will have a perspective, different understanding, different approach towards market when it comes to indicators, or persons like different famous persons like who have written theories like Dow theory, or Elliott wave, or Fibonacci levels, or various patterns that we follow, everything. So you can't try to relate everything into one and learn it and implement it from next day. That's not gonna happen. Maybe all we need is one pattern, or one strategy, um, maybe or few strategies for living. That's what it's all about. And I feel you need to start with a scratch. So this is where we can start. What is technical analysis, and why, and how should we use it? Okay, so to answer first, technical analysis is nothing but prediction, or predicting, or forecasting the price, whatever we call it, using various data, various tools we have. We have so many indicators, 300 plus, or if you explore trading view, it will be completely different, because everyone uses that pine editor and creates their own stuff on that, and even it will take you to infinite possibilities, and ultimately you head nowhere if you follow that. So before that, let's look at it. Technical analysis is an analysis methodology used for forecasting the direction of prices through various studies. So again, it may not sound a detailed definition, and we are not any school going students to know everything in detail what it is, and we are not going to memorize things to understand or remember them and go and write in the exam. It's all about understanding. It's nothing but an analysis to predict the movement of prices in the future, upcoming future. So that is what technical analysis is, nothing else. So other side of the wing is fundamental analysis, and that is altogether a different vast area again, which deals with profit and loss, balance sheet, cash flow statements, the P ratios, and any other financial ratios that actually happen with the company, and decide the right valuation according to fundamental analysis. So that's altogether a different thing. But to quickly cover, next question we have is why technical analysis. So on each of the points we can talk for an hour, easily for an hour. But as this is just a snapshot of what it is. Why technical analysis? Because it has various advantages, like psychology, understanding the market psychology. In fact, market psychology is nothing but investors behavior or traders behavior. Understanding the psychology of the market, technical analysis definitely comes handy. And trend analysis, you can easily identify, if not easily sometimes. Again easy means you'll take it the other way, easy. So what is trend? Trending is nothing but we have three: uptrend, downtrend, sideways. Uptrend is nothing but something, um, you know that something that will be in this pattern, something that goes upside. And downtrend is nothing but something that comes this way, downtrend. And sideways is nothing but something that goes nowhere, nowhere, something like this. So you can't define the direction here anywhere, where it is heading up or it is heading down. We don't know, right? Really, that is sideways. So this trend analysis is also possible with technical analysis. And entry and exit points, obviously you can understand where to enter and where to exit, and also set up your own stop loss and target, defining if that's really feasible. And that's how we take trades, right? If once we define the entry and exit for a trade, we will understand. I mean, let's say I'm ready to buy Infosys at 1700, my target is only 1710, whereas my stop loss is at 1680, 1660. Risk reward ratio is not at all favorable, and stop loss is 50 rupees and reward is only 10 rupees. So ideally I will not take that trade. I may spend another 15-20 minutes to search one more opportunity where it is suitable more. So all that things are also identified using technical analysis only. And information refers to a vast thing. Again, information is nothing but um, like various implementation of various theories, like Dow theory, Elliott wave, which are very famous in the market. And using various indicators, various chart patterns, various candlestick patterns, everything gives a accurate or um, better prediction of what happens with the price of a chart. That is it all about. What is technical analysis and why we need to use technical analysis. This is it. And moving forward, okay, let me take some space so it will be clear. Yeah, three general assumptions for the discipline. So technical analysis accepts basically these three assumptions. Keeping them in mind, then only we have to move forward. Most of the people agree with these assumptions, because uh, that's how it came up, and it became a very popular concept. So first one refers to the market discounts everything. Don't take that our big billion day discount concepts here, but it refers to price of an instrument, or price of an index, price of a sector, pricing of a sectorial index or anything, uh, referring to the background of the company. If an company is too bad to move forward, if a company is not at all in a better shape, it will just can't survive for a very good time on the chart. Even if for that matter an economy is not at all good, having so many negative factors that are impacting an economy refers to country. You can take any country for that matter. If that country is not performing in terms of GDP, or the reserves, forex reserves, or unable to manage economy due to inflation, interest rate thing, the current scenario that's running on, and all these things ideally reflect in the price of a chart that's been visible. So that is the first and most important assumption that comes in this, that market discounts everything when it comes to a price of a sectorial sorry price of a company's chart. Any company, if the performance of the company is good, cash flows are good, business is growing, and new contracts, new projects are coming up, and analysis, the ratio analysis or the financial ratio analysis that's been performed in part of financial fundamental analysis, or continuous trend, good trend in the stock, everything, trend of the business, I mean, everything is going up, going well, stock price will also definitely follow. Why? That is what the first most assumption is all about. Market or a price of a stock discounts everything what it is about a company. If a company is bad shape, into too much of debt, unable to pay salaries to employees, and running into losses, continuous losses, and capital is evaporating like anything, and company is going to be soon shut. Before company goes for closure, share price will become 2 rupees, 3 rupees, from whatever it 2000, 10,000, whatever it is. We have past scenarios. You can go back and refer anything on Google. That's the most important information that we have access to right in this current world. Previously it was not, but when everything is in your hand, it's all about your own effort to move forward. And second is assumption is price moves in trends. Like I said already, there will be trends: uptrend, downtrend, sideways. So price can move in trends, maybe in uptrend, maybe in downtrend, maybe in a sideways scenario. So this is also one assumption. A price can't keep moving without any trend. It can't be like this, or it can't be like this. It will keep moving in trends. One second, I'll refresh. Okay, it keep moving in trend. It keep moving in trend again, or it stays sideways, goes nowhere. So uptrend, downtrend, sideways one. So it can be anything. The second most important assumption. And the third assumption of technical analysis is history tends to repeat itself. History tends to repeat itself. What does it mean? Very simple. Anything that happened previously will definitely happen most of the time again. That is not that is what history tends to repeat. Meaning, let's say Nifty is trading at some point, and it tested this point, and then it started moving up. So I'm drawing something, just wait. So Nifty made some pattern like this. So from here, Nifty has fallen to here. Let's take it as some 14,000. Okay, 14,500. Sorry for the bad handwriting, but let's take it as 14,500. So this is a past event now. So from now, current level of Nifty, wherever it is, if this tends to reach the same point again, expectation is history tends to repeat itself. So what happened from previous 14,500? There is a sharp bounce. So if not the same level of bounce, it will do something like this much before going down again. So this is an expected area that Nifty will bounce. So this is the meaning of history tends to repeat itself, meaning action that happened something previously will happen again. I told you the simplest definition, but when you really brief it out, it also tends to give more understanding about psychology of people, psychology of investors, how they behaved at a certain point of time, and they'll behave the same way again at a certain point of time, whatever it happens in future. Like you know, Corona dip, okay, which was not at all expected to happen that sharp, but everyone was selling like market will close tomorrow morning, right? But now when we talk it now, right, like this is the time. See, that was the time which we missed 7,000 odd or close to 8,000, below 8,000 in Nifty was a point, dream point, that to enter stocks in long term, short term, mid term, whatever term it is. And now we realize, oh shit, we missed this dip, man. And now what happens? Everyone is waiting for one more dip to come. It will never come until you stop expecting, because that is what market psychology is all about. If you are expecting a dip very hard, it will not come so easily. And if you are right, only once you will feel like you are some big analyst, more than Warren Buffett or Rakesh Jhunjhunwala, and you start feeling, yes, I discovered market and my job is done. Tomorrow also I'll predict, I'll do something. And most of the traders, especially index traders, burn their hands this way. Today you made profit, katam. They'll start blaming the services that they take, and next day they burn their hands and they'll say goodbye to the market. Simply show that anger, everything. I can understand, really it's your hard-earned money, but you are the one who need to properly manage the risk if you want to really survive in the market with the same level of capital that you're having in hand. You can't afford to lose capital, at least in the first go. If you are in starting, don't start with big capitals like 5 lakh, 6 lakh, 10 lakh. You just entered markets, man. What do you know about it to start with 10 lakhs? Maybe start with some 50,000, 20,000. What is that nothing for you? Start with that. If you are a working person and 1 month salary is nothing for you, start with that. Just see how it goes. Take that experience home and then come back when you really feel you are consistently surviving, you are doing good, you are at least doing better. Come back and simply take more input, more capital, take more every day or every month for that matter. That's how it should be. And this is just a caution that I've told you for the new people who have just who are just into the markets, because it's ideally important for everyone to understand that getting back the capital, same level of capital, is impossible or near to difficult if you really don't understand what is it to you. Someone with 5 lakhs will say, post losing that 5 lakhs, okay, not before. Sir, I lost all the capital. I want to restart. I have only 25,000 to start. Am I good to start? And can I recover 5 lakhs? You're asking 16 times of your capital, and how long it will gonna take, and which is option buying. If you have referred to the previous videos, you know that we have a 33% probability compared to the sellers, option sellers. Not talking about accuracy of our calls that we share, but buyers have only 33% probability, whereas sellers will have 66%. Reason, you can just go back and refer to the videos again and again. You will definitely find it out. And reason which capital is difficult. I mean, if you can't arrange at least 2.5 lakh and you expect to recover 5 lakhs in one go with only 20,000. Wow, awesome. Okay, anyway, moving forward. So these are the three assumptions: market or the chart that we see discounts every shit information about the company, about the country, about the sector, anything. And price tends to move in patterns or trends, and history tends to repeat itself most of the times. Of course, now things are changed though. It You need to identify what is a trap, what is a correct breakout, or things like that, and then move on. So going forward, then next question will be how to use technical analysis, how to predict movement of a share price, historical data, trends, chart patterns, candlestick patterns, indicators, and volume. So just to correct it, this is how it should be. Okay. Yeah. Everything of it plays an important role, but how do you evolve? Which one you use is completely on you. Lot of information is available on Google or YouTube for that matter, which is really helpful. Only thing is you need to put some time from your life for this. Maybe 15 minutes a day also does. Don't watch all the shit about people saying giving idea about trend, what will happen tomorrow in Nifty, what does you have to do is something that you need to do. And I mean to say, you need to invest in yourself in learning, not seeing daily video, daily YouTube video to understand market. Okay. Okay. So with this is just a basic idea about technical analysis. This is what it is. So to gist out, what is it? It's a forecasting method. Why? Because it has various advantages, and these are assumptions. And keeping these assumptions in mind, you need to do technical analysis. And how? Using various things that are available and handy. So before moving forward, um, I'll just go to, okay, let's proceed with this only. Um, 1 second. Okay. So Nifty chart. Let's take something which is really clean. Anything is fine, not for that matter. But I just want to see. I'll definitely draw something on every chart though. Still, I'm trying to find if I have something right. Okay, let's see. Don't read all this and again go with those names. Okay, there is nothing to do with that. I don't know if there is a really good investment. I'll only let you know. Don't worry. Okay, so basically, mm, I'm not searching for anything. I'm just searching for chart where I really drawn very less. Okay, we'll remove this also for now. Okay, so okay, let's take monthly chart. That will be good. So what are these called? These are called candles. As of as you many are aware about it, these are called candlesticks or candles that form a chart. So it's nothing but movement of price over a period of time. In 2016, it was at 308 and moved to 730, 800, 800, then 450, and now 1000. Blue star. So this price movement, you are able to see the movement, but in what month, what happened exactly, in which month there is a fall, where did it start in a month, where did it end in a month, what low it made in 1 month, and what high it made in a month. So for all that, you need candles. So through candles, you can understand, like here you can see In March 2020, the corona fall, so from 805 rupees. On the top, you can see on the top here, you can see from 805, O is for open, 805. It made a high of 824. Then it made a low of 408.90 paise, and then it closed at 459.45 paise. 343 rupees is the lost value. 42% company has gone. The share value has gone. So this individual description of any price movement. So as I kept M, so each candle is a month. So in 1 month, this is what it is happened in the stock. So this is the candles that we use, and how do we read it about a candle. I'll just give one small summary. Um, okay, I'll take this. Let me retake. One second. Okay. Oh my God. My bad. Okay. Yeah. Okay. This should be fine, I believe. Yeah. Uh, I'll draw one more also with the red one. Okay. So typically, this is how we see candles, right? My bad. Okay. Typically, this is how we can see candles, right? So basic understanding about them. So when a candle is formed in green color, meaning price has gone up in that particular minute, hour, time frame, whatever it is. So if I say in a month this has gone up, so we have green candles. And if I go for hourly, 3 hours I took. So if you see in 3 hours, this 3 hours it has gone up. This 3 hours it has gone up. If you take 15 minutes, okay. So market opened at 9:15 till 9:30. This is green, meaning price opened at a lower point and closed at a higher point. That's the reason candle is green. If you take even minute, it will be the same. At 3:16 to 3:17, 1 minute, price movement was from 1036 to 1055, made a high of 1060, and this movement happened in 1 minute and it is still green. Reason, opened at a lower point, closed at a higher point at that time frame. So that's how candle is formed. Okay. So going back, so when a price opens at a lower point, closes at a higher point, but made a low, made a high, then a candle is formed in green color. Okay, so it opened here, it went down, it went up, then it finally closed here. That's how a green candle is formed. Then how a red candle is formed? A price which opens above but also went up, made a high, also went down a lot, made a low, then closed at a point which is lower than the open of that time frame or that candle, then a candle will be formed in red color. Hope this is making sense. And we have two components of any candle. The fully covered area is called body. This is called body. um, I don't think so. This thing must switch. Okay. So this full area is called body. This one or this one lower portion is called wick. Wick of a candle or wicks of a candle. Okay. This is upper wick. Oh, my bad. This is upper wick. This is lower wick. Hope it's clear till here. Okay, this is how a candle is formed. So very basic understanding what happened, how it happened. Everything is a detailed concept, but I'm trying to squeeze the video as much as I can. Though it already passed 30 minutes, I'll try to finish it up very quickly. And this may be the last concept that we will discuss today, because this is the basic insight that's required. And okay, so this is how a candle is formed. A green candle is formed opening low, closing high. Red is formed opening high, closing low. And that's what we see. Okay, let's just go back and see one live case. Okay, so this is a red candle. Open should be high, close should be low. On the top here you can see O is for open, H is for high, L for low, C for close. You can just see opened at 9:45, closed at 8:45. Though it made a high of 9:59, made a low of 8:11, and it closed at 8:45. So open is at 9:45 here, close it at 8:45 here. But this small wick, if you can carefully see, this small wick, from 9:45 to it is till 9:59, because one time price went up but it came back. Same goes with the lower wick. One time price came down but it pulled up back. So that's how a candle is formed. Same for the green case. So current candle has 8 more days. Just ignore this. We'll take this September candle. Strong candle. Okay. Open is 772. Low is 770. High is 939. But close is 910. 17% up move in the candle. So open 772 and low is 770. The wick, lower wick is very small, 2 rupees. Reason why it is almost not visible, that there is a wick. But on the higher side, close is at 910 and high is 939. So you can see clear wick of this 29 rupees difference. Okay, so that's how this candle has formed. So candle after candle gives a better understanding what's really happening. We'll definitely learn more, but to gist out, this is what it is. So simple concept, if you really apply the same here, open, let's say open is at 100 for this green candle, low is at 98, and high it went till 112, It closed at 109. Okay. So this is how a candle is formed. Same that's the scenario we have seen, and same goes with red candle. Open 110, high one. 1 second. This goes very near. Okay, high 113 something, and low 99. Close, too close. 1 second. Yeah, close 100. Same. So opened 110, closed 100, red candle. Opened 100, closed 109, green candle. Simple. Maybe you understood this basic concept till here. Okay, it's already 36 minutes. I really don't have a problem to share for 2-3 hours videos, but what happens is you people don't really watch if the video is lengthy. You will see, okay, I have to spend 1 hour. You can't spend 1 hour also to uh, learn something, right? This many concepts are really covered in each individual video. People try to make money through YouTube and wherever, but I thought I can definitely help you out this way, at least to make it easier for you. And after this, yeah, I want to show you something. So you can simply open one TradingView account, in.tradingview.com. This is the website where you can just open your own account with your Gmail ID, as simple as it is. On um, your PC, you can log in and it will stay auto logged in only. You don't have to do anything. See, you don't have to do anything. Like let's say I close this page, but if I try to reopen it, it will just automatically take me where I left, right? I don't have to log in, do all the procedures always, and create your own watch list. You can create, you can't do this many, but you can create your own watch list where you can just watch the price, what happens with the price, and how to add an instrument, what to do, what all not to do, everything. Just go to YouTube and search trading view tutorial or basics of trading view. You get Rachana Ranade is one of the most famous YouTuber who is also a chartered accountant, who gives an insight of how to use trading view and moving bulls, whatever bulls it is. But overall, yeah, Rainer Tio, his videos also will be good on basics. Also, anything for that matter. Spend some time and just learn how to use this website. I'll also teach you though, but for your understanding, this is what you can do. And this website application is available on Play Store, even iStore or App Store, whatever it is. There also it's available. You can just freely install it and add things and just start watching charts. Simply start watching. You'll understand a lot of things, and this is what you need to do. With this, I think we should conclude the session. Anyone have any questions, you can definitely shoot them to my ID, which I've been shared with you guys. And just to add at the end, a view for Nifty. I don't give views regularly. Still, how do we draw these lines? Everything will definitely learn in detail. Nothing wrong, but view remains simple. If I go to daily chart, okay, if I go to daily chart, you can only simply see that it has taking resistance at this strong zone. I mean, it tried, tried again, fallen hard. Meaning this level is so important. Uh, Previously it touched, it bounced. Now it's trying from downside. These lines are acting as a strong zone. When it was above, it was a support. Now it's below, it's a resistance. And any questions on support resistance, you can just Google it. As of now, I can't tell you more. And my next level is 17200. This is a good buy. And if at all 16700 comes, that's going to be a very good buy for long term. I'm not saying it will come, but if it comes, Okay, so maybe if people call it a flag pattern, it gave breakout, it will definitely bounce as per me. And that's how things work in market. Nothing just goes straight. Just like what we discussed, price moves in trends. Nifty will not go like rocket upside, rocket downside. It will just make patterns, and that's how we trade CEP, everything. Okay, so you can see this is a strong bearish zone. All red candles, very few green candles. Not much strength in the green candles also, hardly 4 or 5, and not real strength, showing that this kind of moves you can see opened down, open down, open down, open down. Okay, but where did you see that kind of buying here? Nowhere, right? You can see here, it's visible. Open up, open up, open up, open up, open up, open up. It's continuously took higher, but it's completely taking downwards move. So trend is overall bearish, but one bounce may be possible again, something like this and this. We never know. We just have to analyze an intraday basis again. But view for tomorrow mostly will be bearish if I'm sorry, mostly will be bearish again. But idea should be sell on bounce. So post making this low, it just bounced this much. If this falls below this level again, it may fall hard, or if it directly opens somewhere here as a gap down, we are going to wait for a bounce, then short. And overall idea should be short. Else if we get a bounce till here, this zone, then also we'll short. That is the idea. And if we see some sheer strength here, this zone, if that breaks, we may play a call for upside of this 100 points. That's how we gonna do it for tomorrow. Overall my expectation is downside only still, but let's see. That's why I told close everything and go home, because there is a long weekend coming out. Do not carry CSPs anything, and still we'll see what market plays out. It's not something that will work 100% of the time. Reason why we call it a prediction, not decision that I took and market should fall, market should rise and everything. Okay. With that, signing off. We'll see you soon with one more video. I'm thinking of planning each video a month if that's feasible. If it's more feasible, I'll try to do more than one video in a month also. Definitely make use of this content, guys, and keep exploring over YouTube, over Google. You have questions, you can shoot it to me. If I know, I'll definitely let you what it is. If I don't know, I'll ask you to search more and let me know. Okay, let's be all become better traders and keep learning, keep earning with us. Thank you so much. With that, signing off. Take care and see you tomorrow. Bye.